We have come to the final topic today, and we're running ahead of schedule, so we may have you out of here a little ahead of schedule. We'll see how this goes. This is basically miscellaneous topics. So this is everything we couldn't stretch into a half hour or 1 hour presentation, but we get a lot of questions on. So it's going to go over a lot of different topics. If we need, stop if you have questions, or if there's more that we need to do on that. It's really just kind of a catch-all, and this is really based on questions that we have either received from you all or from our staff on issues that you're dealing with. The first one is the transfer on death deed. This came from the recorders. We did talk to them during their conference on this. We had issued guidance in a recent county bulletin, and we had incorrect information in there, which they caught very quickly, fortunately, and let us know. So we went through several discussions to make sure we understood what was going on. And we want to make sure you have the same information because this does involve your office as well. So the first thing is that the transfer on death deed itself does not need to be endorsed by the county auditor for it to be recorded. And this is what we were learned or schooled on by the recorders. This is extremely important because those deeds come in and need to be recorded in a very timely manner, and so that it doesn't prevent anyone legally from getting this transfer done. So it does not have to route through the auditor's office because it does not need an endorsement. Okay, the affidavit which completes this transfer certifying the death does need to be endorsed by the county auditor before it can be recorded. I misspelled recorded. Before it can be recorded or given to the recorder. I guess I condensed that into one word. I have to fix that. That's funny. And that because you need that information in order to make the actual transfer in your records. Okay. What we pointed out when we talked to recorders, and we want to make sure that your county's established, is you have all the information that you need to make that transfer in your records. So if you need to see a copy of the transfer on death deed to get additional information, then there needs to be a procedure for them to get a copy of that to you. It doesn't have to come before the transfer on death itself is recorded, but they need to get that information to you. Okay. I missed anything on that? Oh, it's okay. So I did put the statute on here for the actual information on this transfer and death deed, and that's where you will find that it does not need to be endorsed by the county auditor before it can be recorded. And then later on in that same section, but if you go, or same chapter, if you go to the section 26, it talks about the affidavit itself. The affidavit should contain the legal description of the property, the date of death of the owner, the name and address of each designated beneficiary who survives the owner or is in existence on the date of the owner's death, the name of each designated beneficiary who has not survived the owner's death or not in existence on the date of the owner's death, and a cross-reference to the recorded transfer on death deed. And if there's more information, I'm not an expert on this, if there's more information that you need that might be on that transfer and death deed, they need to get that information to you. Question? Good. I was just going to say, are there any questions on that?
So can the county be more restrictive than statute and require the transfer of death deed to come to the auditor's office?
I believe not, because statute, you can't have a local ordinance that changes a statute. And the statute says it does not need to be endorsed. The problem comes in because legally that transfer on death deed has to be recorded before the death. So if it's being done during a very late time in a person's life, they have a very limited time to get it done, and that's the whole point, is that it should not be held up for paperwork. So they want to get it to be able to record it. So I would say no, you cannot establish a policy that would require it to be endorsed before recorded.
That's it. There's another one.
We did not realize how much this would bring. Controversy this would bring up.
A couple came in. Sorry. All right. If the transfer on death deed does come to the auditors, can we Can we charge the $10 fee?
We are not going to take audit exception to that. Now, legally, whether you can charge a fee when it does not need to be endorsed, I'm not sure on that. And it would be easy enough to say, you know, you can just record this. You don't have to have it endorsed by us. So I'm not on tricking somebody into paying a fee they don't need to pay, but.
There's another question here, but she's abbreviated some stuff, so I don't know if you have it up, if maybe you get it more than I get it.
I'd have to get out of my PowerPoint.
It says, what happens when you have a QCD, transfer of death deed?
Quitclaim deed.
Thank you. Or WD, transfer of death.
I don't know what that one is. The statute specifically refers to transfer on death deed.
Warranty deed. Thank you.
Warranty deed. If they are categorized as a transfer on death deed, then you're going to follow the statute. If they're not, you would not. They would need to be endorsed if they're not a transfer on death deed. Because a transfer on death deed is two parts. You've got the original deed and then you've got that affidavit. If the transfer is occurring with the one, either the warranty or the quitclaim, then yeah, that's going to have to be endorsed because that's that's when it's being conveyed. The property's being conveyed. That makes sense.
I think so. Okay. I don't know if this is a question. We do try to review them because they usually have incorrect information on them. They are sometimes included in the affirmation on the death for a spouse that should be transferred. I think just a comment.
And again, you need to work out procedures with your recorder so everything gets done as timely and efficiently as possible and everybody has the information they need to go forward. I am not an expert on transfer on death deeds, so I'm probably not the best person to ask about those kinds of things, but check with your recorder as well.
Hold on. Oh, no, go ahead. Sorry.
That's okay.
Wait. There's okay, the transfer on death requires a transfer to add the transfer of death interest to the property. That's why we require it to come to the auditor's office.
You can get the information at the same time if that's your policy, your county policy. You just don't have to you can't require it to be endorsed before it's recorded. But you can set up procedures to say, I need a copy of this when you're recording it, make a copy, send it down to my office, up to my office, wherever your office is.
Okay, can the transfer, sorry.
This is a big deal. We spent hours with recorders on this, believe me.
So, can the transfer of death be combined with a quitclaim deed or a warranty deed? We have attorneys doing this, adding like life, estate, remove a name, add a name, etc.
That's a legal question. I can't answer that. I wouldn't even guess.
That was it, sorry.
Okay, we're going to talk about reimbursement and appropriations again, not that we haven't probably knocked that to death before now, but maybe one more time will help clear it up a little bit. As you are probably sick and tired of hearing us say, to disperse from county funds, you need sufficient fund balance and sufficient appropriation. Once a claim has been posted to that appropriation, that portion of the appropriation has been used and is no longer available. There are certain times when an appropriation can be restored, and this does cause some confusion. Okay, this is only when it's authorized by statute or uniform guidance, which would be the examiner. The first one is when the county receives a payment, usually from an insurance company, for a claim regarding a damaged asset of the county. So you have a county vehicle, it's damaged in an accident, the county receives money from an insurance company to repair or replace that vehicle. That money could come from your own insurance, it could come from the other person involved maybe in the accident. If the county is going to repair or replace that particular damaged asset, not another one, that one. So in our example, that particular vehicle with the insurance proceeds, and those repairs or replacement will be done within 12 months of the receipt of the payment or settlement, then the auditor has the ability under this statute to add that appropriation to the appropriate expense line to pay for those repairs or replacement. Okay, so there's certain things that have to, it's not just when you get the insurance. There has to be, you have to get the insurance and are going to repair or replace that asset. You can get the insurance and say, we just don't need that vehicle anymore. And obviously that money can be put back into the general fund, but it's not going to be appropriated by the auditor. Then it's going to have to be reappropriated by council for use. It's only if it's going to be used to repair or replace that asset. They did expand the statute a year or so ago, I can't remember exactly when, and added an individual as well as insurance proceeds. So if an individual damages an asset of the county and they are liable and personally pay the county back for that damage, those proceeds would be treated the same way as if they came from an insurance company. So if somebody runs over a county sign and then gives the money to replace that and you're actually replacing the sign, you can do the exact same procedure. You can go in and put it on the line item to pay for that. All of the requirements must be met to increase the appropriation. The payment must be received due to damage of an asset, not another reason. The proceeds must be used to repair or replace the asset. Okay? Again, if you receive the settlement and decide the county chooses not to repair or replace the asset, then it would be posted to the appropriate funds, such as a general fund, but there would not be an increase in the appropriation unless the council did an additional appropriation. Okay? If the repair can't be done within the 12 months, the auditor would not increase the appropriation for that. You would put it in the fund, and then at the point when the repair was to be paid for, you would need an appropriation then to spend it. Another situation that could increase the appropriation is when a claim is paid in error or the warrant exceeds the claim amount due. So this would be something like, just clerical error. The claim was for $100 and you paid $200. So the vendor looks at it and goes, oh, that was too much, and they refund $100 of it. Okay? Or the claim was paid twice in accident. And so the vendor looks at it and goes, you've already paid this claim and they're refunding that money to you. Okay? So if you discover that it's happened, of course, you're going to request the vendor to return that money. And if they find it, then they're probably going to refund it to you. Okay. If it happens in the same year as the error, so if the error, the claim was paid twice in February and it's discovered in October and the money's refunded, you're within the same budget year. Okay. Then you can go ahead and restore the appropriation. If the error is in November and you don't find out, where the vendor doesn't notice it and the refund isn't done until February of the following year, then you cannot follow this because you're in a new budget year. This is only if it happens in the same year. Okay? Just put my radio. So what you would do is receipt the reimbursement or the refund amount back into the fund from which it was paid, and then restore the appropriation for the amount of that. And that kind of makes sense if you think about it. You had a set amount appropriated for a particular classification. You accidentally overpaid it. So it makes sense that you can restore that so that your original budget then is restored to what it should have been if you hadn't made the error. I lost my room over there.
Oh, you flipped. Oh, sorry. She's throwing stuff at me, guys.
I'm sorry. It's a long day. So this is what I referred to when we were talking, when we were going over the CARES information that Ricky was doing, where it said you can restore the appropriation when you're moving the claim in a similar manner to this. This is the statute she was talking about with that.
Okay, so should there be an adjustment to the initial claim to prevent the overstatement of expenditures? in this instance of a duplicated claim. Sorry, things keep popping up.
You need to document that it was a duplicate claim. You need to cross-reference to where the refund has been repaid. So during an audit, it will show they're going to pick up that it was overpaid, paid twice or overpaid. You have then the audit trail to show, yes, but we got the money back and it's been restored. Is that what you're asking? Maybe.
Maybe.
Think about it.
Think about it, let us know. I'll interrupt her.
Okay. Interfund reimbursement. We get questions about this. This is not an overpayment. Okay, this isn't what we were talking about in the previous slide about reimbursement of overpayments and reference to that particular statute. Okay, this is an example where one fund may pay the cost for all of the county and then get reimbursed by the other offices, funds or departments. It's not probably as big a deal when it's all the general fund, but if you had NVH getting reimbursed from general fund for fuel purchases or something like that, we have a central service cost that's being paid by one and is coming back from those. You could have, you can do that. You can have a central service cost paid out of one and then reimburse that, but that money just goes back into the fund and you should have sufficient appropriation for that department to pay the entire cost for the year. You can also allocate between the funds. So if a fuel cost comes in and you know how much was the sheriff's department and how much was the park department and how much was the highway department, you can allocate that claim to those various funds and budgets rather than having the reimbursement go through. Okay? But there is no authority to bring that reimbursement for another fund in and then increase the appropriation for that. That's not the same thing as the overpayment, paying a claim twice or making an error on a payment. We also get a lot of questions about rebates, which are similar but not exactly the same thing. You need a county policy on this, whether you're going to use the rebates, how they're going to be used, who has control of that. When you receive a rebate, it's usually in the form of a credit to a particular vendor, and that needs to be tracked and accounted for. Number one, we want to make sure that someone isn't individually using that rebate for their personal use. You want to make sure you have a policy that if one department is the one that's getting the rebates, that there is a policy who gets to use, which other departments get to use that rebate. That's going to be a county decision, but you should have it in place. What that rebate does is basically reduce the future cost of the goods purchased from the vendor. The rebate is always the property of the county, so there should be a policy in place for use and treatment. If the vendor provides product or other goods as a bonus, these goods belong to the county. If they are not useful to the county, the county can then declare it surplus and sell it, or they can put it into use. The purpose of rebates, bonuses, special gifts, etc., really is to persuade you to use that vendor. However, the decision to use a particular vendor should be made on the cost and utility to the county, not on the desire or the purchasing agent to receive the bonus, rebate, or gift. Believe me, I have gotten questions about chef pans, I think, at one point, which were not. It's county property, and the county needs to decide what to do with it. It should not have employees arguing over who gets to take it home.
Unless they have a county chef. You don't.
There you go, I guess you could take it out to it. Well, if you had a the jail, I guess, and they could use it in the kitchen there. Is there any place, or county home would have a kitchen? I mean, there's places you could use it for that. But the most important thing is to get if your county is using rebates, sometimes they're gift cards, again, sometimes they're credits, coupons for against future purchase. Just make sure that you have a policy in place and everyone is following that policy. The next topic we're going to tackle is forfeiture of assets. This topic has caused a great deal of confusion, especially since the change in how the forfeiture is distributed was modified in the statute in 2018. And that modification basically ensured that there almost will always be a portion for the state's common school fund, or at least a lot more often than it was. So the procedures didn't change. It's just they got used more because all of a sudden money had to be processed and remitted to the state for deposited into the common school fund. Prior to this change in statute, the forfeiture was used first to pay attorney fees, and the remainder was received to the general fund of the unit that employed the law enforcement agency that seized the property. And if there were any costs remaining, or any proceeds remaining after the investigation costs, that would go to the common school fund. What usually happened was the investigation cost just took the whole amount of the forfeiture and there was nothing left to remit to the state. That's not how it works now. So I put the code on here. It's an Indiana code 342414. Once the property has been seized, it's going to be held or should be held by the law enforcement office until it is returned to the owner or a civil case is filed. If the civil case goes to court and the court declares the seized property to be forfeited, then it comes into place as forfeiture, and that's where it's going to be dealing, because it's going to belong now to the governmental unit and not to the individual that lost the property during the seizure. Indiana Code 342412, which is just 2 sections above this, requires the law enforcement agency to hold the property under seal, remove the property to a place designated by court, or require another agency authorized by law to take custody of the property and remove it to an appropriate location. It is our understanding that really if the sheriff has seized the money, they keep that under seal until the civil case is decided. It shouldn't be floating around anywhere. Hopefully it's taken care of property. If the property is not cash, the sheriff is authorized to sell the property, and the proceeds of the forfeited property, which is either the cash that was confiscated or the proceeds from the sale, are used first to pay the attorney for the civil case. So it's not the prosecutor that does the civil case. There's a separate attorney that would do that. Their fees need to be paid. Then a third of the amount remaining after those attorney fees is deposited into the prosecutor's forfeiture fund. And this was a new fund we established for that purpose. Okay, so after we've paid the civil fees, the civil attorney fees, we've paid 1/3 to the prosecutor's fund. 85% of the amount remaining is placed in the general fund of the unit that employed the law enforcement agency. So for sheriff, it's going to be a county. For the city police, it's going to be the city's general fund. And any residual amount is to be remitted to the state common school fund. So there should be a 15% residual amount of something that's going to be sent to the common school fund. So at the point the property or funds are forfeited, the forfeited funds are turned over to the county auditor. Okay, they do not go through the clerk. They go directly to the county auditor. Well, they go to the county auditor, and county treasurer is going to take custody of the funds, and the auditor is going to properly distribute those. So you should also receive direction on how to distribute these funds, because your prosecutor should have gone through those steps in the statute to determine where the money is going to go. Okay, I know sometimes it comes from the civil attorney, so one of those two should be giving you that information. So the amount for the prosecutor forfeiture fund, you place in fund 1234, which is the prosecutor forfeiture fund. The portion for the law enforcement, you're going to receive into your general fund if it's the sheriff department. Okay, if the law enforcement agency was a city or town police, and the county still receives that money, they would forward it on to the clerk treasurer of that city or town, or it may go directly to them from the law enforcement agency. And then finally, there's going to be a remainder, that 15% of the residual, that's going to come to you to be put from any of these sources, whether it's a city police officer or town, or your county, or the state police. where you're going to get money for the Common School Fund. So you receipt that into Fund 7101. It's the same place you've always receipted it, you just didn't get it very often. But that fund is forfeitures and fines. Actually, it's fines and forfeitures. The balance in this fund is remitted semi-annually to the state auditor's office by the county. The auditor of state needs this portion to come through the county auditor's office and be included on the report sent with these semi-annual remittances. That's why it has to come through the auditor and not through the clerk's office. Okay. They do not want to receive from the law enforcement agency. They don't want to receive it from the clerk or the prosecutor or the state police. They want it to come through the auditor's office on that form for that semi-annual remittance. And that has been one of the more confusing parts of the new statute. There was always a procedure to remit this that just wasn't used very often, and now that it's happening more often, a lot of people are thinking it's new, but it's not. It's just it was already established. The only new part is there should always be that 15% residual amount. Are there questions on that? Okay. So when this law was changed, it created a new fund. We already talked about it, the Fund 1234, Prosecutor Forfeiture Fund. The purpose of the fund per the statute is to offset expenses incurred in connection with investigation and prosecution of the action, which is very similar to the language for putting it in the general fund for the Sheriff's Department. And again, these costs have already been paid by the county prior to the forfeiture, so the purpose doesn't really tell you how the prosecutor is to use this fund. We did question the Indiana Prosecuting Attorneys Council, or IPAC, and their guidance was that it should be used for the same reasons as pretrial diversion funds. So unless legislation changes, this is the best advice that we can give. When the prosecutor is using it, should be along the same lines as their pretrial diversion. Okay, there was one exception to placing the law enforcement agency portion, or the investigation costs of the law enforcement agency, into the general fund. If there is a joint drug task force, the proceeds can be placed into the fund established to support the drug task force instead of the general fund, and it makes sense if the if the drug task force was part of the investigation, and the costs for that joint task force are being paid out of that drug task force fund, it makes sense that it goes back to reimburse those costs. So just keep that in mind. If you do have a drug task force and you are the fiscal agent for that, you can put it in that fund instead of the general fund. All of this is in a bulletin article. And I put just a screenshot here, but if you go to the county bulletin, volume number 416, it's September 2019. It talks about the custody for the funds and the accounting for the property once the auditor receives that. So it's in writing beyond just these PowerPoint slides. Okay, we talked a little bit, no we didn't, I think I took it out of there. We were going to talk a little bit about it when we talked about the AFR, but the levy excess fund has seemed to cause some confusion for all of our taxing units, counties included. We wanted to introduce this here in this discussion, but I think you're going to be hearing a lot more about it in the next year. I included the statute that establishes the levy excess fund on this slide. So you will find it in Indiana Code in 6-1.1-18.5-17. It tells you what the levy excess fund and establishes that fund. Okay. And people, probably not as much in counties, but I know there is some confusion. There's a difference between the levy excess funds that we are discussing and a levy excess appeal. A levy excess occurs when the amount that you have collected in property tax exceeds the levy set for that year. That's the basic understanding of it. Okay, so we're going to see how that works a little bit. We have a fund on the Uniform Chart of Accounts for levy excess funds. It's Fund 1167. Deposits to this fund occur when the taxing unit collects more than its tax levy for the year. The total property tax collections need to be adjusted for the collection of delinquent property taxes from a previous year's levy. DLGF calculates the levy excess and notifies you if any property tax collections need to be deposited in the levy excess fund. You do not need to calculate this yourself. They track this amount for all of the taxing units, so they have a record of which counties should have a balance in the levy excess fund. Well, what we found in looking at the 2019 AFRs is there were more counties with balances in this fund than DLGF expected to see. And we'll go over some reasons for that. To disperse from the levy excess fund, the balance needs to be included in the subsequent year's budget. Okay. It would be moved to the fund indicated by DLGF and spent as part of that subsequent year's budget. So the statute says, except as provided by subsection F, and we'll go over that in a second, a civil taxing unit may not spend any money in its levy excess fund until the expenditure of the money has been included in a budget that has been approved by the Department of Local Government Finance under Indiana Code 6-1.1-17, and that's your budget statute. Okay. Subsection X states that it is possible to use the levy excess to reimburse a fund or funds that had property tax withheld to pay out a tax refund under 6-1.126, which is your refund statute. Okay, that's the only other time it can be moved. Other than those two reasons, the balance in the levy excess fund may not be used. It sits there. So it's very important to make sure it's included in a subsequent budget so that it can get moved to a fund and spent, and not just sit there. And that's what we want to really avoid is that turning into some kind of dormant fund. This is a situation, and we're going to go over transfers in a little bit again. This is a situation where the statute specifically states and authorizes a transfer of funds, because no money may be spent directly from the levy excess fund. It's got to be transferred to another fund to be spent. So as I mentioned earlier, DLGF has a record of which counties should have a levy excess fund. So those are the ones they told them you need to move money into this fund, and that will be included in the subsequent year's budget. But when we looked at the levy excess fund activity for 2019, there were counties that had activity and fund balances that were not part of this record. So you can help prepare for next year. If you have a receipt to the levy excess fund, it should have been under the direction by DLGF. If they told you to move it in there and you've moved it in there, everything is good to go. A county would not calculate their own levy excess, so you wouldn't be your responsibility to figure out what should be moved and move it. You only would do it under the direction of DLGF. So if you look at the history of your levy excess fund and trace your receipts back to direction from DLGF, you're good to go. If you find another reason that it was moved, then that's something we need to look at. So you need to flag that and keep the documentation of everything that you've discovered in that research. Okay. If you do have a legitimate receipt into the fund, then you should have a subsequent transfer out of the fund under the direction of DLGF in the subsequent budget. So if you move money into the levy excess fund in 2018, it should have been spent in 2019's budget, and it should have been transferred. Now they give you on the budget order, they give you direction to move that money to the appropriate fund, whether it's general or another fund that has a tax levy, but you have to do the actual transfer. So that is another way that maybe it got stuck into a balance and never got moved. It should have been moved, a year ago or 5 years ago and never got moved. Okay. So if you determine that your receipt into the levy excess fund was correct, that's what DLGF told you to do, but the amount was not transferred out the next year, check your budget files from the time of the receipt forward to determine if it had been included in a subsequent year's budget. But the transfer simply was not made, and you keep documentation of that as well. And you, of course, can correct that now, even though you're transferring it a couple of years late, just keep the documentation that, oh, we should have moved this to general fund 2 years ago, so move it to general fund, and that clears that fund out. So you could start on the research if you have time, or if you have, first check and see if you even have any fund balance. Determine if a correction needs to be made. If you can determine that you know what the correction is, go ahead and make the correction and keep the documentation. If you can't, don't spend a lot of time on it, but keep all of the research that you have done. And DLGF will be working with the counties in 2021 to get this fund back on track. We're going to go ahead and look again at the end when we get the 2020 AFRs turned in to see if, what the current situation is and move forward with that information. Okay. But just remember, you cannot disperse from the levy excess fund itself. It is a holding fund, and the balance needs to be transferred to another county fund before the balance can be dispersed. And that transfer can only happen based on the direction of DLGF, or if you are replacing money that you paid a refund out on. Any questions on that? Clear as mud.
Clear as mud.
Cool. We do sometimes get questions on when solid waste management is done by the county or if it's a separate district, and how that affects the accounting for the solid waste management. So we're going to go over the differences. And then we're going to touch on some other common special districts that often get confused, whether they're a department of the county, and how to start working out to make that determination. Are they a department of the county, or are they a separate special taxing district? So we have a specific statute for solid waste management. It's in 13-21-3. Before June 30th, 2017, it was mandatory for a county to belong to a solid waste management district. And that could be a district that only covered the county, or it could have been a joint district with one or more other counties. The district itself was a separate legal entity. It would have its own separate governing board. They would have had their own treasurer, and that person would have kept their financial records for the district. They would have had their own separate bank account, and they would have had their separate budget approved by DLGF, and they would have completed a separate AFR on Gateway. So a solid waste management district would not be included on the county's fund ledger. However, there could be interaction between the county and the district. The county actually establishes the district. The county appoints the board members for the solid waste district. During the planning and organization of the district, the county could provide a grant or loan to the district. The county would also receive a copy of the proposed budget for the district. The district could contract with the county to collect solid waste management fees, and these not property taxes, but actual solid waste management fees. That contract has to be approved by both the auditor and treasurer and the county commissioners, and a notice of the fees then could have been included in the property tax notice sent to the taxpayers. Still, even with all of that, the district was a separate legal entity and would not have been included on the county's fund ledger or their financial report. Okay. We have had comments on this in the past when those solid waste management district funds were commingled with county funds. Since June 2017, it is no longer mandatory for a county to be part of a solid waste district. And Indiana Code 13-21-15 was added to the statute for the purpose of dissolving the solid waste management districts. This process involves the adoption of an ordinance with a specific effective date of the dissolution, and at that time, any legal obligations of the district would be assumed by the county. Any assets of the district would be turned over to the county. As an added note, if the county belonged to a joint solid waste district, the process is a little more complicated, as the assets and liabilities have to be allocated on a proportionate basis to each county or remaining solid waste district.
Can you repeat that?
Which part?
I don't know.
It's in Indiana Code 13-21. That's the solid waste management.
How often would the board be appointed? It's a different question.
Oh. I'd have to look at the statute. I don't know how long their terms are.
This is, can you repeat TF?
TF. What is TF?
I want to say transfer. I don't know why that's not right. I know that's not right.
Do you know what that is?
She wanted the IC code.
Okay.
Apparently not the one you just did.
Okay. 13-21. Okay. Chapter 3 is on solid waste management districts. Chapter 15 is on the dissolution of those districts by a county and what procedures need to be followed.
Thank you.
Okay, so we're in chapter 15, we're going through the dissolution of solid waste district. So again, the assets go to the county, the liabilities become the responsibility of the county. If there's a tax levy for solid waste management, the levy can continue, and the county would receive the levy. Any fees that have been established can continue to be collected and retained by the county. And at this point, the solid waste management is now a county department. There should be a fund or funds on the county funds ledger to account for the receipts and disbursements of the solid waste management department. It's part of the county now. It's not a separate legal entity. So when you call us and ask, this is one of the situations we're going to go over a few more in a little bit. You call and say, does my solid waste management include it on the fund? We need to know, is it a department or is it a district? Was it established under the 1321.3? It has not been dissolved. Okay, or has it been dissolved and now it's a department? So we have to do more research to answer that question because it could be one or the other. Both can exist. There are solid waste management districts that still exist, and there are some that are now departments of the county. Here are some other special districts and the IC code that goes with those. Sometimes these are confusing because we're trying to determine which is a department of the county and which is a special entity or a separate entity, we call them special districts. So I've listed some of the more common ones that are separate legal entities and where you would find their authority in statute. Having a separate governing board may be an indication that an entity is separate from the county. However, there are departments that have separate boards: park departments, health departments, redevelopment commissions, tourism commissions, drainage board. So that's not in and of itself going to be the answer, okay? There has to be a statute that authorizes the entity as a special district separate from the county or from the city or town that established it. Okay, redevelopment is very often confusing. A redevelopment commission is a department of the county, even though it has a separate governing board. The statute changed in 2014, and the funds of the redevelopment commission have to be included on the county's fund ledger. However, it is possible for a county to establish a redevelopment authority. That can be found in Indiana Code 36-7-14.5. I've got that on the slide. The redevelopment authority is a separate legal entity. It should have its own treasurer that maintains the funds of the authority. There should be also filed a separate AFR on Gateway. They would be audited separately. Note, for GAAP units, that redevelopment authority is usually a component unit of the county that established it. When the purpose for the authority has been accomplished, the board can declare the authority dissolved and the title to all assets returns to the county or city or town that established it. Airports can be departments of the county or city or town, but the unit could establish a separate airport authority under Indiana Code 8-22-3. An airport authority, again, would have its own bank account, keep its own funds ledgers, but for GAAP units, this could be a component unit. Soil and water conservation districts are also separate entities established under Indiana Code 14-32. The county may provide funding for the district, but it would still be a special district, keep its own books and its own accounts. Port authorities are established by local units under Indiana Code 8-10-5. These are separate districts that would have their own board and their own financial records again. Land banks can also be established by local units as separate legal entities under Indiana Code 36-7-38. They would have their own boards and financial records. The county can provide property that's not sold at tax sale for the purpose of development of local neighborhoods to the land bank. So there's interactions between the county and the land bank, but it is a separate entity. It would file its own separate AFR and have its separate audit. Okay, as a FYI, if your county does establish special districts, please let us know that they exist so we can get them on the audit schedule. Sometimes we don't even know they're out there. They may not file an AFR because they don't know they need to. We may not be auditing because we don't know they exist. Finally, you can have an interlocal agreement that can create a separate legal entity, and this would depend on how the interlocal agreement was written. So an interlocal agreement is an agreement between two or more political subdivisions, so two or more counties, a county and a city, or a county and a town, and they are exercising a power that all of the subdivisions in the agreement share. So it's a common power, and you've come together to exercise that power. This agreement can specify that one of the units would maintain the funds and records for the interlocal agreement, or it can establish a separate legal entity. So you have to look at how it was established. You have to look at the actual agreement itself. So if you ask us, the first thing we're going to ask you is send us a copy of the interlocal agreement, if we don't already have it, to see what was established. Any questions about that, or figuring out whether something belongs to the county or is separate?
No, not yet.
Working with the courts. We receive a lot of questions about how the courts interact with the counties. Ricky and I did a presentation for newly elected judges. We recorded one, and they're going to show it to them in November after the election. And we wanted to include some of what we put in that training, just so that you guys have the same information. Courts are a unit of the judicial branch of government. The courts are not a department of the county. Court employees are not county employees, even though they are on the county payroll and receive county benefits. This is sometimes hard to get your head wrapped around. However, court employees are not considered county employees. The court is funded by the county, so there needs to be a budget for the court, and the court does not have any funds that are not held by the county and included on the funds ledger. They do not get to have any individual funds of their own. They have to go through the county for that. We did explain in the new judges training, it's very important to keep lines of communication open between the court and the county auditor's office to ensure that they have timely payment of court claims and payroll. It is possible for the court to establish their own personnel policies. However, they should provide a copy of their personnel policies to the county auditor so that payroll claims and travel claims and any other policies, area claims that are affected by those policies can be audited and paid timely. Our audit position is that if there is not a separate written policy for the court employees, we will default to the county personnel policies during an audit. If they have not established a separate written policy and made that available, then we're going to assume they're defaulting to the county policy for their personnel. What this boils down to is the courts don't have to use the timekeeping system that's adopted by the county. However, they do have to track their employees' time and keep employee service records for their employees. If we pull a court employee during the audit of the county payroll, we will be requesting that information from the court. If there is a finding, it will be against the court, not against the county, because it's the court's responsibility to keep those records. Since the court is not a department of the county, the courts don't submit the budgets. The clerk, as a county officer, would submit a budget for the court. That budget should have been approved by the judge, and then that budget has to be approved by the council. The courts are required to work within their approved budget. They can ask for additional appropriations from the council. They do have the ability to request a mandate if they believe that the appropriation is not sufficient. But without that mandate, they must stay within their budget. Courts are required to make sure that their personnel that work with vendor claims or payroll claims would need to complete internal control training and provide certification of that training to the county auditor. Again, if we have findings related to the courts, those findings would be shown as court findings. So much quieter here, because I figured there'd be more rumbling if we were doing this in person. Just saying. Okay, so those court claims. Judges approve the claims for the court. All of the claims have to be processed and paid through your county's accounts payable system. However, the court claims need to be are not approved by the... Yeah?
I just have a question, but we can wait for a second.
That's okay.
Question is, did you say the clerk submit the court's budget?
Yes, I did. It is in Indiana Code 3625, in there somewhere.
Okay.
And that's the budget statute within the counties.
Okay.
So the judges approve the courts of the claim. They do not need the commissioner's approval of their claims. However, court claims need to be advertised 3 days before the warrant is issued. The cost for publication should be included in the budget, either under the court or in the auditor's office, or you have that money up front that you need to advertise those claims. They do not need the approval of the commissioners because the judge is the approver of that. What often happens is that rather than advertise those claims, the courts will sometimes just send them through the regular accounts payable, have them go before the Board of Commissioners at a public meeting, and have them be approved at that public meeting without the advertising. We do not take exception to that. It's not technically correct, but we don't take exception to that because the public meeting kind of takes the place of the advertisement. But when it comes down, push comes to shove, and they say, and the county commissioners won't approve a claim, and they're going to approve it themselves, then they've got to follow the policy. If they're going to start approving their own claims, which they have every right to do, they're going to have to get them worked up and into you so that they can be advertised 3 days before the warrants are issued. As an added note on grants, there are grants that are given to the court rather than the county. So we're going to ask, if you bring up a question on that, who is the grantee? Was it given to the county or was it given to the court? Some of the Supreme Court grants go directly to the court themselves. The courts can't keep those grant funds. Those have to run through the county. You've got to set up a grant fund for that. But the court, the judge, is the actual one that signs the grant agreement. They need to get you a copy of that grant agreement so you can audit the claims against that agreement to make sure that they're proper. Okay, but they don't have to get permission of the county if they're the ones that they're the grantee of it. And we just have to go through. There are, community corrections grants are county grants. Okay, a problem-solving court grant might be a direct court grant. So you just have to look at how the grant is written and who is the actual grantee on that.
All right, I got a couple.
Okay.
So courts are not departments of the county. What about the prosecutor's office, the clerk of the circuit court's office?
The clerk of the circuit court is a department, it's an elected official of the county. So they're just like the recorder's elected official, you're an elected official, the treasurer's elected official, but they are all part of the county. So they would need to follow county procedures. Prosecutors are part of the judicial district. So they're going to be similar to courts.
Or probation. Sorry, it came from two different things.
Yeah, the probation department usually falls under the courts, but I think more than likely they're county, because the state establishes how probation salaries are to be paid, and I think that works through the county. So I would think the probation would be a department of the county, although the courts kind of oversee it.
Yes, and I'm pretty sure you answered it if I remember, but I'm gonna ask it again. If the commissioners approve the court's claims in a public meeting, do they need to get advertised?
We do not take audit exception because they're being approved in a public meeting. But if you're going to go technically by the statute, all court claims are supposed to be advertised 3 days before the warrant is issued.
That's all I got right now.
Okay, we're going to talk about transfers. I told you earlier today we would get back to this. I think this is the last topic that we have before we get into
Let's see.
the website.
If the prosecutor is a court office, are there employees, court employees or county employees?
They are court employees. But they also have to have a budget, and that they have to stay within their budget.
Okay.
They don't have mandate, by the way, like a court does.
Okay, sorry, I'm moving. Who submits the prosecutor's budget?
I believe the prosecutors probably do, because I don't think there's anything in the statute about the clerk doing the prosecutor's budget. I will look at the prosecutor's statute and see what it says on that, because it does talk about the county funding of the prosecutor's office.
Okay. What if the judge sets up court services and includes probation office? Would they be court or county?
Probation would still be county. Court services depends on what that actually is. If they're like problem-solving court employees or something like that, they would be employees of the court.
Sorry, they're coming in on court employees. If they are not considered county employees, do we have to offer them insurance or sick personal vacation? Also, does the county council still have to approve their salaries?
The council has to approve their budget. Their salaries have to come within that budget. But the judge is probably going to set those. So the problem's going to be if they're asking for more money that's going to be approved. What was the first one?
Hold on, I switched to another one. If they are not considered county employees, do we have to offer them insurance, sick, personal, vacation?
I believe you do, under the same rules. I mean, they're court employees rather than county, but that you are funding that. And so as employees, they're entitled, if they're full-time, entitled to benefits, you would have to fund that as well.
Okay, hold on a minute. They're just coming in. Which one's the last one I read? If the court gets a reimbursement grant, do they have to get the appropriation?
This is a very difficult topic. I did talk to your counsel about this, not this year because I didn't have a meeting, but a year ago I went and talked to them about appropriations. If it is, the county is the recipient, I think for reimbursement grants, you're still going to be paying out of county funds. So there would need to be appropriation, whether it's in their budget or not, how they do it. What we get pushed back from the council is if we can't say what they're going to use the money on, then why do we have to appropriate it or rubber stamp through the grant budget? My pushback would be it's something, where you are funding the whole county, including the courts. You need to be aware of what funding is available, what's being used for what they would need to have a budget within the county for, what might be paid for by grants. So I would think that information would be important. If it is a reimbursable grant and they have a budget that is set along those classifications, personal services, supplies, contractual, capital outlay like you have for your appropriation, we will not take exception if that budget is, or if that is not appropriated. It should be, but we're not going to take exception as long as they've set up that grant budget is broken down into those classifications. If it's not, then yes, they're going to need appropriation.
All right, and then you have thrown us for a loop with that bit of information, apparently.
Which bit? All of it, or?
I don't know.
Sorry.
I think that's the last one I have so far. Keep talking. Oh, wait. Okay, well, does the Community Corrections Advisory Board fall under the county purview?
Yes, that is a county program. And the statute actually says it has to be appropriated.
No, this is good. We like the back and forth. We can't see you when we're giving the presentation, so we do like these questions.
Okay, moving on to transfers. Okay, so for this topic, I want to be very clear. We are talking about transfer of money or cash out of one fund balance into another. We're not talking about appropriations now. We're talking about moving money from one fund to another. Sometimes those terms get interchangeable, and we'll get emails that'll start out saying, can we transfer from one fund to another into a specific line item? So you want to keep them separate. There's a transfer of fund balance from balance to balance. There's also procedures for transfer of appropriation. Those are two separate transactions. So what I'm talking about is just what we talked about this morning, moving money from one fund to another fund. I do want to point out that last fall during the quadrant meetings, we did discuss transferring appropriations. That information is still available on the auditor's page under presentations and training if you want to look at that again. Because who wouldn't? Really? Okay. So back to transfers out of the fund balance. We're transferring money, cash, from one fund to another. So it's a basic tenet of fund accounting that each fund is a separate accounting entity. The general fund is your main operating fund of the county. We have special revenue, capital projects, debt service funds that are established to provide separate accounting for a specific revenue source or a purpose of the fund. The receipts and disbursements related to those special purposes needs to be accounted for within that fund. Moving money from one fund to another blurs the reason the separate fund was established. Okay. If there were no need for these special funds, we could just run everything through the general fund. We'd have one fund, general fund, and first come, first serve kind of thing. But it's been determined that there are purposes that are out there that need to have special funds allocated, the revenue sources allocated, and the disbursements coming out of those special funds. So our basic rule again, you cannot transfer money or fund balance from one fund to another unless there is specific statutory language authorizing the transfer. So we're going to go over some of those permitted transfers in the next slide. Okay. You guys stop laughing because...
No, I just love that this topic, the courts. Whenever we talk about courts, it's always,
it's always a turmoil. I know.
Totally get it, because it's very, very confusing. But somebody did, suggest that we get a list of what offices are court offices under the judicial branch.
Okay.
Like, have a list someplace. So we might be able to do that. Sorry, to interrupt your transfers.
Okay. Ricky talked about this yesterday, and I'm just going to kind of touch back, so kind of confirm that. Prior to 2017, when we made the changes in the lit statute, There was specific statutory language, she read that to you yesterday, that authorized money in the County Economic Development, the CEDAT fund, to be transferred to the general fund or another fund of the county. That statute was repealed. There is nothing in the local, when the Lowett statutes were repealed, which was 6.3.5. That's been repealed. I think the only thing in there is wheel and excise surtax now. And 3.6 was established for local income tax, and there is under the expenditure fund. One of the purposes of that is economic development. We added a permitted to use, or the statute added a permitted use that edit funds could be used for any lawful purpose of the county, which makes them similar to general fund in that way. But it took out the authority to move that money. Any edit money needs to be paid out of the edit fund. If it's an appropriate disbursement from the edit fund, it should be paid from the local income tax economic development fund itself. You don't move it somewhere else. So we talked about this morning, the most common transfer is probably the rainy day statute. And I've got it on there. I think we put it in the chat as well. Well, I've got it under 35. It's 36, so that one's wrong. I can't type. It's 36-1-8-5.1.
You knew it.
I knew
you
it.
Just didn't type
I
it
just
right.
didn't type it right. So, okay. That allows for both transfers into rainy day, from general fund, from lit funds, from dormant funds. It's actually in 5. Those are transfers into rainy day. And then in 5.1, it talks about transfers in as well as transfers out. So you can also move money from rainy day back to the general fund or to another fund of the county. So the statute specifically says that those transfers are allowed, that you can move the money in that way. We had a question about cumulative funds earlier. And if you go to the code 6.1.1.4115 that's on the slide, it states when the purpose for which the cumulative fund was established has been accomplished or no longer exists and the fund or tax rate is no longer needed, the remaining fund balance would be transferred to the general fund. So you can move money from cumulative funds from general funds, but only when you're done with the cumulative fund and that tax respective tax rate that goes with that cumulative fund. It can be established at a later date, reestablished, but that's what you do with the balance when you no longer need that cumulative fund. Drainage fund statute is found in Indiana Code 36-9-27. It does have provisions for funds to be appropriated from the general fund to the general drain improvement fund and can be transferred from general drain improvement back to the general fund if they are not needed. There are also provisions for transferring funds from drain maintenance funds to the reconstruction fund for the same drain. And if you need the specific statutes, I can send you that. But if you go through 27, there is specific language about when money can be transferred between general fund and general drain improvement and between the maintenance and the reconstruction or construction or reconstruction. In Indiana Code 36-2-7.5-11, there is authority to transfer funds from the Identification Security Protection Fund to the Recorder's Record Perpetuation Fund. It states in the statute, money may be transferred. You guys are already aware for the surplus tax and tax sale surplus, both of those, that if the claim has not been made within 3 years, the money in that fund is transferred to general fund, and that's specifically in the statute. So if you want to know or you ask us if money in the fund may be transferred, first thing we're going to do is look at the statute for the fund, the originating fund, the fund you want to take money out of, and see if there is any language that authorizes a transfer. The chart of accounts fund description tables do include the enabling statutes for each fund. So if you're looking for a particular fund, that's a good place to look and see where the statute is and then see if there's anything in the statute about transferring money out of that fund. Always, if you're not sure, give us a call. We'll be glad to look it up and discuss it with you. But again, to transfer, there has to be specific statutory language authorizing that transfer. Questions on transfers?
Nope.
What are we doing?
We got 5 minutes.
Okay, I'm not doing so great, am I? Okay. I want to go over a few items on the SBOA website. So I've listed the address on here. I'm sure you all have it bookmarked, so you don't need this, but just in case, I put it on here. We have been working on updating this website. We're in the process of migrating to a new platform. That platform has more robust and useful, user-friendly searches by topic. So we know now that you go to our website and try to search, it's not a very convenient thing to do. We don't like it either. It brings up way too much information or not enough or nothing that you need. We spoke last May about this, and in preparation of that, we took all 10 years of the county bulletins and put them in topical format so that if you go in and type in tax sale, it's going to bring up the particular bulletin article that, or any particular bulletin article that addressed that, or within the manual. Okay. So it's going to be much easier to find the information that you need. It's going to be much easier for other people using it to find that information too. We have been promising to update these manuals for way too long. We know that. Every one of us that has started has fully intended to do it, and time gets away and we just don't have time. I know it's not much of an excuse, but believe me, our days are full beyond. I mean, we're working more than the day just to get through everything we need to get through. But with the new website format, we can update by topic rather than having to rewrite the entire manual. Yay! This will allow us, for example, to pull out the information on a particular topic, such as maybe claims processing or receipting, and update that information, include it in a format similar to what we've done with the county bulletin, so that a search will pull it up and show it as a section of the manual without having to do the entire manual and reissue it as a whole complete document. Okay, this is much more doable and allows us to really get to work on this. We do have the YouTube channel. We have taped our presentations from the May virtual conference as well as this conference. A link to those recordings is available on our website under presentations and training. We will also have the ability to record training on specific topics. We talked about doing something on depreciation and accumulated depreciation as an example that we can then put in that YouTube library, and then you can go back to it as often as you need to review or work through things or refresh your memory on what we've talked about. So those are all exciting things we're hoping with this new website. Okay. We did talk about that we have changed the format for getting our information out to you as a group email. We sent out a ton of emails this year. We know we did because of COVID. We were constantly updating and getting out new information to you, and I know it was information overload. But this whole year was overload, everything overload. What we have always done in the past is we just had a spreadsheet with everybody's email address in it, and that's what we use to get these emails out. It's not a very good system. It's hard to keep it updated. We can't add people. We were lucky to keep 92 counties straight, let alone deputies and vendors and everything else. We are using a new system called GovDelivery. And the biggest advantage is you can add yourself to the list to receive this information, okay? And what I have is a screenshot. So if you've gone to our website, you're on the home page, and you check under political subdivisions, you click the link to counties. When you've got the counties page open, you go down and you've got county auditor. You could do it on all of them, but we did county auditor for you. You go and click that, opens it up. The first thing you see is the information to reach Ricky and I, so our emails and phone numbers are on here, and right underneath, and I put a blue arrow. The blue arrow is not on the website. It's awfully small for someone as old as me to see, but there is a line that says to subscribe to our email list, please sign up on this page. You click that link and add yourself, and you can get these bullets, emails that are bulletins, they're called bulletins, but they have the information if we're sending out an examination or examiner directive or a new bulletin or new procedures, or we're going to have a training session, or this is information on the conference. Click on that and you're going to get all of that information. There are topics within that. So there's auditors, clerks, recorders. You don't want to get enough. You really don't need to click everything except the particular, you guys just need to click auditors. If you're a vendor, you can click, if there are other offices that you can serve, you can get additional information on that. But I wouldn't go into information overload by clicking all of them. I would just choose the one that's more pertinent to you.
Can I add something?
Yes, I was just going to say, Ricky's going to talk to you about suppression of.
Yes, so real quickly, what we were finding out is that little Excel sheet that she was talking about did not have everybody's information. So what I did is when we switched over to this, I went through and got everybody's correct email addresses and put them into the new eGov so that hopefully just auditors, I can't go past that. But just so you guys could all get the information. What was happening is it was kicking back some of your emails and saying, we can't deliver to those because they have unsubscribed. So if at one point you were maybe you were DLGF, I use them because they're the most common that I know, and you just didn't want to get some of the stuff they were sending and you unsubscribed, it would not allow me to add you because of that. So I did send an email to those individuals who were what we're calling suppressed and wouldn't let me add. So please, we really need for you to go there because that's like I sent that thing out this morning. So if you're not subscribed, you're missing out on some memos or like the question thing that we sent out this morning. This important information. We do not send like daily updates. We do not send you a weekly newsletter. What we send is really the important information you need to know. If we're going to have conferences, I sent out the call letters and stuff through it this time. So please, at least auditors, please go and subscribe. That's my plug. Except for I've got something. Hold on a minute. We have questions. Okay? This is Zach.
Do we have any questions, auditors that are in person? Yes, we do.
Hi, Ricky, this is Vicki. Remember I was saying that I signed up for this, but I did not get the email for some reason, and we can't figure out what the problem is. I'm just wondering if you heard from any other auditors that they're not getting.
I have not. Those that I've heard from, I've sent them to link to subscribe, and I've not heard anything back. So my assumption is they're there. Maybe when I get a little bit of downtime after this, and I laugh because there's not really downtime, I will try and export that and do another comparison. But again, I don't know what I'm going to get to, but I will try. Vicki, I will definitely have you on my list, and I will try and figure it out. I know I've checked you out before. And it's in there correctly, but I'll do it again. Maybe I misspelled it. Maybe it's just not in there right.
Okay, thanks. And if I could just ask if any other auditors are having a problem not getting the emails, maybe
yeah, just let me know.
Not alone.
Yeah, please let me know, because sometimes it might be if you have two emails, like you have an auditor at and then your county whatever, or you have it where it's your name. And you've got both of those, it might be going to one and you're not checking that one. Maybe it's going to the auditor one and you're only checking your personal one. But I don't know that. So you just have to reach out to me, let me know, and I will make sure to change it within the system if I can, and get you so that you're getting these. Any others?
We have one last slide.
Just one.
Oh,
Just
wait.
one.
We do have another question.
Okay.
Sorry. I don't know what county these people are from, but they'll have a question for you.
Hi, Lori. I really enjoyed your section on the courts. Found it very interesting.
That's sarcastic, right?
No, I really did enjoy it. Two questions. The first one, recently, this year we received a court order from one of our judges to issue bonuses to all their employees. We kindly refused, but were we in the right to refuse that court order, in your opinion?
Technically, yes, although we would never, ever, ever tell you to go against a court order. Those people can put you in contempt of court, and you're not going to jail over this. So that would be something that if you get something like that and they're pushing it or threatening that, staple it to the claim, let us know, we'll put it in the data file, and the finding would be against the court for that.
Okay, well, I did ask her not to put me in jail until Friday.
Well, we don't want you to jail at all. A lot of it's going to depend. They can do bonuses. Do they have appropriation? Do they have sufficient appropriation for that? You know, they can't just say, hey, county, now you got to pay all this additional. If it's within their appropriation, they budgeted for it, they could change the salary schedule for their employees.
Okay, it was not within their appropriation, so I figured.
Then they've got a problem. They got to stay within their budget.
The other question I have is on the court claims, since they advertise their claims, do we need to hassle with them paying their expenses out of appropriate line items, or can we just let them fly since they have a judge's signature?
They could transfer between line items within their budget. They could approve that. But they need to stay within their budget. So they shouldn't be playing fast and loose with it. So I'm not sure exactly, if it's within, one supply to, supply line items and stuff, then they could tell you to go ahead and transfer it from this. If it's, within the personnel, within a classification, they could tell you to go ahead and transfer from one appropriation to another. But they should be monitoring their budget and asking for something like that.
Can I ask a question, a follow-up question regarding that, Lori? Because we do have our judges move money around periodically, and if they do that, and can commissioners deny a claim that they don't feel is appropriate in that respect? If a judge goes ahead and purchases something.
Okay, the judge can approve their own claims. They don't need the commissioner approval. So if they're advertising them, it doesn't have to go to the Board of the Commissioners. You can do it with the judge's signature because they can approve the court claims. But they still need to work within their budget. They can't go outside their budget unless they get a mandate. Otherwise, they need to stay within there. Now, they can go to the council and ask for additional appropriation, but council could deny them just like they could anyone else's. It depends on, what your status of your county is. Does that answer the question?
And then they could mandate funding
The mandate would have to go before another judge. So they could request a mandate if they feel that the county is not sufficiently budgeting their court properly. But those, believe it or not, it's not very often, those have been denied. I have seen mandates where the court has said, no, that's not reasonable, and they've not approved the mandate. So it's not an automatic, but they do have that option.
And would that go before review of that? Would that be a local judge that would review that, or would that be someone?
It's in the court trial. I can send it to you. We also have a bulletin article on it. It's I think 60.5 in the trial court rules on how the procedures for how that works. But it goes before another judge, not within your county. It would probably be outside your county.
Okay.
Good there. I did have one other question that came through. So, can anyone sign up to get the emails, or only elected officials? The good thing about this is anyone can sign up for the emails. I'm going to push for the elected officials because we send these things out specifically for you. But if your deputies want to jump on there and get the emails as well, it's fine. All I have to do is go to that link. Anybody can go there and subscribe.
And we do have another question.
Okay, since probation department salaries are determined by the state and given to us as a minimum amount to be paid to them, I believe there's a perception in our county with the courts that those employees fall underneath the courts and not the county. So there's tendencies to make decisions based off of individual situations instead of following county handbook. But I know in your previous comments, you felt like probation falls under the county. How would you recommend we deal with these situations?
Where's the probation budget? Is it under the courts, or do they have their separate budget?
They have a separate budget.
And where are they, I mean, does the court have they, I'd have to check, have they included probation officers as part, I mean, their personnel manual would just be their court employees.
Our courts do not have a separate employee handbook. We've mentioned that several times, but they have not created their own. And I know your comments said that that would fall back on the county.
That would fall back on the county, then you don't have any other thing to look at. So what are you talking about, mileage or travel claims or?
In general, timekeeping, office operations, things like that seem to be protected by the courts, even though they're county employees.
Let me look into it a little further. I would guess they would be county employees because they're not officers of the court. They are part of your public safety, kind of like, it's alternative to jail time. You go on probation and you have supervised services that way. So I'm guessing county, but let me look into it. The problem is going to be, what I say may not matter a whole lot to your judge. I don't want to get you in the middle of something. But during an audit, I can tell you that, we're going to default to the county policy if
Okay,
there's not a separate one.
Thank you.
So we did have a question. Is the email link on this page the same as eGov? Yes. This link right here is eGov. Okay.
All of our emails are going to come out through the Gov delivery now.
Any clarity that can be given in regards to how to handle some of these sticky situations regarding judges and prosecutors in regards to appropriations, general policies, authority of boards regarding these departments, and also expand our knowledge on mandates. Help us avoid confrontations that are useless.
If I could do that.
She'd retire because she'd have lots of money.
What we said, and again, it's all we can do when we get the opportunity to speak to the judges, like we did for the newly elected, is keep hitting open lines of communication, cooperation. You need each other to keep going to get this done. But it's in the last few years, it just seems like there's a lot more discord than there is agreement. And I don't know the answer to that. I think some of it, again, just, be respectful of each other, be patient with each other, and just explain, these are the rules we have to operate under, just like you have rules, for the financial, and hopefully they can work it out. I know there are times when it does not work out. So all we can do is continue to provide education and training, and for you all to advise you is to keep those lines of communication open.
I think good. Let's go to the last slide.
Okay. Last topic. Yay! Okay, so we get COVID under control, we get these vaccines, which they're vaccines that they're promising us, and we're getting our life back to normal. What we plan to do in 2021 is again to have the quadrant meetings in the spring, because we only had one set of them, and we want at least 2 sets to make sure that we have a good basic understanding of how well they work or don't work. So that may be a 1 or 2 day meeting based on exercises. It's going to be the smaller working groups. We are discussing and brainstorming and trying to find various uses for these virtual sessions even beyond 2020. For example, the clerks, as I said, did not have a conference this year, but we did a short virtual session on the election payroll, same one that I gave to you, took about an hour. We believe there are many topics that could lend themselves to something like this. You know, if we had, you know, could have had a CARES virtual session maybe in June or July when a lot of this was coming through, or done them monthly if necessary to keep you updated. So we're seeing some utility for keeping this going. So all of these sessions again we're recording and we're putting on YouTube. We're also going to record where we don't have an audience, but just do some training. We already have some basic ones on there, but we're going to add to that library to give you more of a resource. We're kind of excited about this. You know, we were fearful, at least I was, going into this because it seemed like this is never going to work because I can't get any of my technology to work. But hey, Ricky's pulled us through this, and I think we're accomplishing this. So please let us know if you have ideas on training, topics that you'd like to see at conference, topics that you'd like to see for these sessions, topics for small working groups, anything, you know, just, you know, brainstorm. And if you're thinking about it, just shoot us an email while you're thinking about it. We'll just keep track of them and put them together. So we want to thank you so much for your participation in this conference. It's been quite an experience. Stressful for everybody. I know your association board has worked very, very hard to pull this off. Be sure and thank them for all of their hard work. Stay safe. We look forward to next fall when we will all hopefully be together in person and back to normal events, because we, as Ricky has said before, we miss them. We miss being able to see you and talk to you in person. So we're hoping this dark cloud goes away and we're able to do meet again in person. So thank you again for your attention and patience with everything as we got through all of this. And I think there was a lot of good information provided, so I hope it has been very helpful to you.
I do have a couple things, just a couple, real quick. So certifications. We'll get that stuff together. It might be a little longer than it was in May, just because I've got the virtual. You're probably going to get yours first, is going to be my guess, just because it's an easy turnaround for us. Those that are in person, I hope that you sign the registration sheets. As soon as those get sent to us, we'll get that all together and we'll get those certifications put together. If you're virtual, only the auditor is going to receive a certification, okay? If you're in person, as long as you attended, you will get one. Okay, that's so that you get the travel and all of that. I'm going to be working up a survey. Again, hopefully I can get that out sometime next week. If not, it'll be the following week, but I'll get it out soon. Please be as honest as you possibly can on it. We do want to use these and utilize them even in the future, not for really big conferences, but for smaller ones. And so your feedback will really, really help us as we start going that way a little bit. It's all anonymous, so whatever you say, we won't know who it is. I also want to remind you that we're not doing a Q&A session tomorrow, okay? But we will be getting a special bulletin out sometime next week. Both days have been recorded. So what I'll do is this is a very large recording, so I didn't get yesterday's recording actually processed until today. So I'll get today's tomorrow. I will pass that off to Dustin, our IT guy, who you saw earlier this morning if you were on. And he will break those up into the smaller little bits. We'll put them on YouTube and our website so that you guys can watch these in smaller bits again real soon. And other than that, we really, really appreciate everybody being here. We hope everyone has safe travels home. and stay safe and healthy throughout this. Julie, it's really great to see you. We didn't see you yesterday, so you're front and center on my screen right now. So it's really great to see you. So anyway, thank you. All right.
Have a few words to say before we end the session, if we could.
Go ahead.
Okay. About tomorrow's training, Vicki Urbanik has sent out the link site training, and for the virtual, you'll be able to view it through that link. For those of you who are at home, if you did not receive the link, please email Vicki directly, and she will provide that to you. I would like feedback, how the virtual users and the on-site individuals, what they thought of this conference and how it was handled. You know, certainly going forward, if this is going to be the norm, we need good feedback. So please provide that. You know, we like both the good and the bad, so that we can only make this association better. So please assist us with that. And as far as my on-site viewers, thank you for participating, and we look forward to speaking with you tomorrow at the training and for the business meeting following. So thank you.
Okay. All right. Thanks, Julie. Bye, everybody. Have fun tonight at your talent show. Stay safe, stay healthy.
Thank you. Okay. Thank you. And for those of you who are on site,